And Jan-Henrik Foerster joins us out of Zurich. Let's start off with UBS. Why the shift? What does it mean?
Well, I mean, first of all, what we are understanding here is that UBS is cutting or making cuts to its asset management business. We're hearing about 100 layoffs, and those have been happening over the last months. It's mainly in areas such as distribution, sales. And this is basically a move to keep costs in check at the asset management unit. It's the smallest of UBS's operating divisions, but it had recently the highest cost-to-income ratio. They've made a lot of self-funded investments into that unit. And I guess, this is now a further move. They probably had a second look at it and, came to the conclusion costs are too high, so we have to do something about it. I don't know if these move, if this is something also that's going to happen going forward, if they make more cuts into the business. But this is what we understand as of now. They are taking costs out of the asset management unit. And they want to shift some of these resources being taken out to China. A specific growth area of Sergio, or a growth focus of the bank and the CEO, Sergio Amotti.
I always wonder, as a leader, where do you draw the line between shrinkage and just axing the unit? But of course, UBS, a Swiss bank, they have to be, asset management is kind of the thing that Swiss banks historically do. How do they hold on to this unit, control margins, boost revenues? What's the plan?
Well, it's first of all wealth management and asset management. I think, the whole model of UBS is centered around asset gathering. And thus, this asset management unit fits very well into this strategy. However, they had a lot of outflows. That was mainly because of the restructuring they pursued over the last years. And there's margin pressure. Look, there's margin pressure in this industry. A lot of money has flown into passive investing strategies, which were very compelling to investors because of loose monetary policy. And now this is kind of a move to at least keep the costs in check. And that's really the only thing they can do. They don't know when the cycle is turning and when also more money is flowing into active, more expensive strategies. And so, yeah, they want to control costs. And I don't think that there's a strategy shift. There have been some rumors in recent years that they may do something strategic with the asset management business. This is not my understanding. They seem to be very committed. And this is not a strategy shift. It's rather, fine-tuning here and there and taking costs out of the business. There are a lot of synergies they have from this asset management unit. They can cross-sell into the private bank. And they're also starting investing into platforms, so they offer their services for other asset managers and banks.